Good day everyone, so we are the Dauntless and our topic for today is the Chapter 5 Statement of Changes in Equity. In this chapter, matututunan natin kung paano mag-prepare ng Statement of Changes in Equity at kung ano ang pinagkaiba nito sa Statement of Profit or Loss and other comprehensive income. Pero bago yan, ano nga ba muna ang Statement of Changes in Equity? Statement of changes in equity is the reconciliation between the opening balance and closing balance of shareholders' equity. It is a financial statement which summarizes the transactions related to the shareholders' equity over an accounting period. So, sa statement of changes in equity, tinutulungan itong ma-identify yung mga factors na nagkukos ng pagbabago sa owner's equity during the accounting period. Tinutulungan din itong ma-distinguish yung mga transactions na hindi presented sa balance sheet and income statement tulad ng dividend paid and owner's withdrawal. The statement of changes in equity shows the following information. First is effects of change in accounting policy or correction of prior period error. So if there is a change in its accounting policy for a particular item such as inventory, yung pagbabago na mangyayari doon is magtutuloy-tuloy hanggang sa mga susunod pang taon. At yung effect naman ng correction of prior period error is presented siya separately as an adjustment sa opening reserve sa statement of changes in equity. Next is total comprehensive income for the period, so that the comprehensive income will be transferred or closed in the retained earnings which is reflected sa statement of changes in equity. Lastly, for each component of equity, a reconciliation between the carrying amount at the beginning and at the end period showing separately changes resulting from profit or loss, other comprehensive income and transaction to owners' contribution and distribution. Take note that past one allows the disclosure of dividends and the related amount per share either in the statement of changes in equity or in the notes. Owners' changes in equity are presented in the statement of changes in equity, while non-owner changes in equity are presented in the statement of comprehensive income. So dito pa lang malalaman mo na agad kung ano yung pinagkaiba ng statement of changes in equity sa statement of comprehensive income. Sa statement of changes in equity is lahat ng changes sa equity ng owners is presented doon. Samantalang sa statement of comprehensive income is para naman sa changes in equity ng non-owners. What do I do in retrospective adjustments and retrospective restatements? Retrospective adjustments involves altering past financial information according to a new accounting principle as if that principle had always been applied. And retrospective restatement is correcting the recognition, measurement, and disclosure of amounts of elements of financial statement as if a prior period error had never occurred. So what do I do in retrospective adjustments and retrospective restatements? So itong dalawang to is presented siya as adjustment sa opening balance ng retained earnings rather than sa changes in equity during a certain period. So nandito na tayo sa unang illustration which is yung preparation of statement of changes in equity. So dito makikita yung problem na gagawa natin ng statement of changes in equity. So ganito ang itsura ng statement of changes in equity. So magsimula muna tayo sa heading. Sa heading makikita nyo dyan may tatlo siyang line na nagkukonsist ng company name, name ng statement at yung period na covered. Sa period covered, lagi yan nagsisimula sa for the year ended or for the month ended. Same lang na sa comprehensive income. At yung column naman na nagkukonsist ng share capital, retained earnings, revaluation surplus ay yung components ng shareholders equity. Doon naman tayo sa loob ng table. So kung mapapansin nyo dyan, yung total comprehensive income natin is 220,000. At meron tayong 200,000 na profit. So automatically, yung matitirang 20,000 is yun ang other comprehensive income natin. Same lang lang sa 2002 na year na meron tayong total comprehensive income na 350,000. May 300,000 tayong profit at may natitirang 50,000 na mapupunta sa other comprehensive income. Mapapansin nyo din dyan na yung dividends is ide-deduct mo kasi dyan mo na nga siya i-disclose. So nandito na tayo sa pangalawang illustration which is yung i-compute na natin yung total shareholders equity. So ang gagawin lang natin dito is add and deduct. Ang gagawin natin is ipag-add natin yung share capital, share premium, retained earnings appropriated and appropriated, revaluation surplus, and yung gain na remeasurement sa net defined benefit liability. At ililas naman natin yung losses sa hedging at yung cumulative translation loss on foreign operation and treasury shares at cost para makuha natin yung total shareholders equity na 220,000. Next illustration is yung about naman sa reconstruction of financial statement. So makikita nyo dyan, yung requirement is, i-compute natin yung profit for the year at yung total asset as of December 31. So para makuha yung profit of the year, kailangan natin gumawa ng T-account ng retained earnings. So dahil given sa problem, yung retained earnings ng December 31, 2001 na 60,000 pesos and yung dividends na 30,000 pesos, need lang squeeze yun para makuha yung profit of the year na 90,000 pesos. Para naman makuha yung total assets, ang kailangan lang natin gawin is ipag-add yung liabilities na 145,000 at yung equity na 1,060,000 at makukuha na natin yung 1,205,000 na total assets. So next illustration is yung reconstruction of financial statement. So dito, para makuha yung total asset, una, kailangan muna kunin yung net credit sales na kinukompute gamit tong formula na to. Pero kailangan siyang i-convert dito para makuha yung net credit sales. So magiging net credit sales is equals to account receivable turnover times average accounts receivable turnover. So 10 times 200,000 is equals to 2 million. So yung 2 million, yun na yung net credit sales natin. So bago tayo pumunta sa pag-compute ng total asset turnover and average total asset, i-discuss ko muna kung ano yung total asset turnover ratio. So the total asset turnover ratio is a financial ratio used to measure an entity's efficiency in using its assets to generate sales or revenue. So ang ginagamit na formula sa total asset turnover ratio is total asset turnover is equals to net credit sales over average total, where average total asset is equals to total asset beginning plus total asset ending over 2. So gamit yung formula ng total asset turnover and average total asset, makukuha na natin yung total asset ng December 31. So ang unang formula na gagamitin natin is yung total asset turnover. So pag nilagay na natin yung mga amount dun sa formula, magiging 2 is equals to 2 million over average total kasi yung net credit sales saka total asset turnover is given na. So, kailangan natin siya i-convert into average total asset is equals to 2 million over 2 kasi yung hinahanap natin is yung average total asset na 1 million. Next formula na gagamitin natin is yung average total asset. So, dahil given din yung average total asset na kinompute natin kanina at given din yung total asset beginning, kailangan natin siya i-convert into total asset end is equals to 1 million times 2 minus 400,000 kasi total asset end yung nawawala. At yung computation do sa total asset end is equals to 1,600,000 which is yun na yung total asset ng December 31. So examples, true or false. Number 1, entity A's total equity at the beginning of the period was 100. During the period, entity A earns profit of 20 and declares dividends of 5. Entity A's total equity at the end of the period is 125. So ito, false to kasi hindi niya dineduct yung dividends sa retained earnings. So sabi ko nga kanina, yung dividends dapat dinideduct siya sa retained earnings kasi sa statement of changes in equity, i-disclose na siya. So ganito siya dapat, retained earnings na T-account, 100 equity beginning, 20 na profit, dividends na 5 at ang total equity end niya is 115. Next is number 2, entity B's total equity at the beginning of the period was 20. During the period, entity B incurs loss of 2 and declares total dividends of 5. Entity B's total equity at the end of the period is 13. So ito, true to kasi dineduct niya na yung dividends tsaka yung loss dun sa retained earnings. So ganito siya, retained earnings na T-accounts ulit, 20 na beginning, dividends na 5 at loss na 2. So ang equity end niya is 13. So true talaga siya. So in summary, statement of changes in equity helps a company identify the effect of its business operations to the wealth of the owners. Next is, dividends are deducted from the retained earnings and are disclosed in the statement of changes in equity or in the notes according to past 1. Lastly, yung pinagkaiba ng statement of comprehensive income at ng statement of changes in equity kung saan sa statement of comprehensive income, doon pinapresent lahat ng changes in equity ng non-owners. At sa statement of changes in equity, doon naman pinapresent lahat ng changes in equity sa owners. Sa madaling salita, ang comprehensive income is for non-owners and sa statement of changes in equity is for owners. So again, we are the dauntless, be fearless and determined future CPAs.